Folks, it never fails. Wall Street just tricked a massive amount of investors again. It never fails, okay? That's going to be what we're going to discuss at the front of this video. Wall Street just playing a big trick on everybody, and we'll discuss that, okay? I want to get into several different stocks in today's video that are making some pretty outlandish moves. I want to definitely take you guys through some opportunities I see in the market out there, some stocks that I definitely see as opportunities right now that are very interesting. I also want to show you in today's video something that this thing is showing almost a 100% perfect correlation between this and the NASDAQ stocks. And basically, if this thing goes down, NASDAQ stocks go up. If this thing goes up, NASDAQ stocks go down. And it's almost a 100% correlation in this chart. I'm going to show you it is absolutely insane. So a bunch of different things to discuss in today's video. I appreciate everybody joining me as always. Thanks for being subscribed, folks. I appreciate y'all. Let's get into this, okay? So yesterday, right? Yesterday was what I call an eye roller, okay? An eye roller of a day is when you've been in the market a long time and you see something come out and, like you see the market reaction. It's just like such a fake either rally or fake dip, okay? And so yesterday, CPI comes out better than expected, right? And futures were up initially, and then the market went down and down and down. Indexes all finished red. Public count was down like $24,000 or so yesterday, right? And it was comical. It was comical, and I even told you guys in yesterday's video that I was like, I wouldn't be surprised if the public count's up way more than this tomorrow, essentially, right? It was one of those situations like the market doing what the market does. Some people think it's manipulation. Other people think it's just a market trading. I'm not going to debate that. But what I do know is a false sell-off and a false rally when I see one. And that's all yesterday was. And sure enough, here today, the public count's up $37,000, right? And it just goes to show you like these games that are played out there either in the algorithms or Wall Street's playing. And at the end of the day, like yesterday's news, CPI coming in better than expected, all that means is the Fed has a pause coming. And then they're going to have cuts coming after that. That's all that means, okay? And so at the end of the day, like what's the number one thing that's been working against the market? Inflation. And why is that such a big deal? Not just for the mere fact that it takes money out of people's pockets, but because then the Fed has to jack up rates. And so naturally, anytime if we can continue to have CPI come in under expectations for the next several months, I'm telling you, like that's a game changer for the market and the way everything's viewed out there. And so just a comical sell-off yesterday, okay? Amazon stock had a very big upward move here today, nearly 5%, almost 4.7% for Amazon stock here today. This one I want to stay as low as possible for as long as possible because this is a stock I'm buying this entire year. Okay, so what happened with Amazon? Well, some big news happened with Amazon. Okay, Andy Jassy actually went on CNBC here today. Amazon is introducing a cloud service called Bedrock that developers can basically use to enhance their software with artificial intelligence systems that can generate text similar to the engine behind the popular ChatGPT chatbot powered by Microsoft's startup OpenAI. Through its Bedrock generative AI service, Amazon Web Services will offer access to its own first-party language models called Titan, as well as language models from startups A121 and Google-backed Anthropic, and a model for turning text into images from startup Stability AI. One Titan model can generate text for blog posts, emails, and other documents. The other can help with search and personalization. Most companies want to use large language models, but they really can't use ones that take basically billions of dollars to train, right? I mean, it's just so unrealistic. Why is Amazon Web Services so successful? It's because like not everybody can afford a massive amount of servers and all the equipment that Amazon basically gives to you, right? It's just a lot easier, a lot more cost effective to use AWS versus try to do all that yourself. It's unrealistic, right? In many years, most companies don't want to go through that. Amazon CEO Andy Jassy said on Squawk Box on Thursday. So what they want to do is they want to work off of a foundational model that's big and great already, and they have the ability to customize it for their own purposes, and that's what Bedrock is, right? And so certainly a big opportunity. Now, do I think Wall Street understands how big this opportunity is? Not really. It's just right now. It's like you launch an AI product and your stock goes up. It's the hype. It's the excitement, right? Now, in terms of my opinion, this is probably going to be huge for Amazon long term. Amazon's one of the few companies that continues to innovate and continues to launch launch game-changing thing after game-changing thing. And so Andy Jassy, the current CEO, he was the AWS guy, okay? He was always been focused on that. And so I think the story around Amazon is going to be more and more around what AWS is doing and what they got going on more than e-commerce. People make the big mistake when it comes to Amazon stock and viewing the stock, and they're really thinking about the e-commerce business. The e-commerce business absolutely is important for the long-term future of Amazon, right? All those Amazon trucks flying around, all those orders you're placing on Amazon, great, okay? But I'm telling you, like, the bigger thing with Amazon actually is AWS and everything they got going on, right? And so just always keep that in the back of your mind and always remember, like, even that huge Amazon service you see is actually really, it's the number 2 most important business at Amazon. And that's the craziest thing to think about because of how big that business is and how big the e-commerce business will be over the next 5-10 years. It's absolutely ridiculous, right? But just remember that's actually the second most important business Amazon has, okay? So obviously tremendous opportunity. Now, Meta made another nice upward move here today, right? 3%. Now, there's a little tip for everybody in the market, okay? Because this is what I call the fun part of investing. When you have a position that just gets bigger and bigger and bigger, a 2% move becomes a lot more than a 2% move, let's say a few months ago or a year ago or something like that, because the stock's at a much higher valuation. So an old 2% move could be a $4,000 or $5,000 move. Now a 2% move could mean $10,000 or so, okay? And to give you a perfect example of this, okay, is Tesla, right? So Tesla, my cost base is $39,000 on these particular shares here, right? This stock was up almost 3% today. And that was about a $9,000. So, I mean, we're talking about, that's a 25%-ish move, really, for me, based upon my cost basis, okay? So, yeah, the stock was only up 3% today, or 2.97%, but really, for me, based upon my cost basis, this stock was really up like 25%-ish, 20% plus here today, right? Isn't that incredible when you put it into that sort of context, right? You look at a stock like Elf Beauty, only up 1.78% here today, right? But really, that stock for me, based upon my cost basis, was actually up over 20 percentage points today. Over 20 percentage points. This is the fun part of investing. When you have stocks that are clicking, they're coming together, and the percentages start to get insane based upon your cost basis, folks. This is the most fun stage of investing. And I always give people the example of Warren Buffett. Warren Buffett loaded up on Coca-Cola stock in the 80s, right? And if Coca-Cola just goes up, I mean, a few percent, he basically is making his entire cost basis back if that stock just goes up a few percent. It's incredible. Think about that for a moment. If the stock just goes up a few percent, he makes his entire cost basis in a day. When he gets paid out dividends, he can get paid out as much in dividends over a yearly basis or so that he basically put into that stock on a cost basis. This is where long-term investing starts getting very fun, either on dividends or just share price appreciation. And also a 2 to 3% move is really like 20, 30, 40, 50% based upon your cost basis, okay? That's the fun part of investing, and that's the thing that I think is overlooked. And so just always remember that, because this is, those are fun things to see, right? Now, here today, everything was green out there, right? Which just shows you that yesterday's sell-off was just a fake, like, little sell-off there, right? And we just got an insane rally here today. Every position in the public count was up except one, okay, SH. That's the only position, which is my hedge, kind of, against my portfolio, because it's obviously so long heavy. And it just goes to show you, like, man, you just get a little upward momentum in the market, a decent day out there, and look what type of day it is in the public count, $37,000 move there, right? Boeing stock. So Boeing stock down pretty significantly after hours, down 4%. Boeing warns of reduced 737 MAX production and deliveries due to the parts issue, okay? Now, do I think Boeing is a good opportunity out there in this market right now, okay? My answer to that is no, okay? The reason it isn't, and sure, Boeing, the stock price could go up over the next few years. I'm not going to debate that. But at the end of the day, you've got to look at companies, you've got to look at management teams, you've got to say, is this worth it? Is the risk reward here worth it? Okay. With Boeing, it is nothing but letdown after letdown after letdown after letdown. If you've been watching this company over the last several years, okay, all they do is let you down time and time and time again, okay? Every single time. And every single time you're thinking, Boeing is coming back, all of a sudden something like this happens and the stock tanks a bunch more, okay? And so when I look at a company like Boeing, It's a great historical company. It's a needs-based business model, so it will continue to be there because at the end of the day, we're going to continue to need planes. But dang, like that management team over there, they just can't get it right. Every time you think, oh, it's finally going right, it goes wrong. And I'm already in plenty of, there's already several stocks I own where the management teams have let me down in a massive way, right? Do I want to be in another one? I don't know about that, okay? The only good thing for, like I said, for a Boeing is they're basically a needs-based business model, and they basically have to survive for the United States of America. Like the U.S. government would never let Boeing go under. That's just, they can't even conceive that because it's way too important of a company. There's a few services in industries where literally the United States government wouldn't let it fail. So that's a good thing with Boeing. Otherwise, they would probably be another, I don't know, TTCF or something like that. Like literally, like the management team's been just as bad as TTCF. It's just the difference is the business model, and the one is government protected, and the other one is like who cares about that? But it's been awful. And for a company of that size, I mean, these are supposed to have the best management teams out there, right? A company like Boeing should have the creme de la creme, and yet they have letdown after letdown after letdown, and it just never fails, man. It never fails with that one. So there's so many opportunities in this market, folks, for value stocks and dividend stocks, which is a category Boeing plays in, that I'm like, there's too many other good management teams and business models to mess around with a company that just lets you down time and time again and hope this time's different when they just let you down again and again and again, okay? A company like Union Pacific is one I've been looking at recently as maybe a potential opportunity as a value play, dividend play, right? But there's a couple issues here, okay? A few issues. First off, what did Buffett say yesterday? Buffett said yesterday in his interview, and this impacts United Pacific here, okay? Or Union Pacific, Union Pacific. He said that basically his railroad operator, which he owns Burlington Northern Santa Fe, right? He was saying about, some carloads aren't quite there, right? And just kind of shows a little bit of a weakness in the economy. And so if that's hitting something like a Burlington Northern, it's going to hit Union Pacific as well. That's the bottom line, right? But the even bigger issue is, there's been so many train derailments lately. There's so many of them recently that I just know there's going to be, the cost of doing business is going to go up for these companies. And there's likely more regulation and laws that are going to be put in place. And when you have all that stuff, it's not going to bode well for the train operators. And so I think a lot of these railroad operators are going to continue to face potential margin headwinds over the next 12 to 24 months, kind of based upon all this, okay? A real opportunity I see in this market right now is Cheesecake Factory. This stock I just started buying recently, and I really want to add to this as a very big position. Cheesecake Factory, as far as the stock price, it's in a bad place. Bad place. That's the best way I can put it. But in regards to this, right? The way I kind of view this, right, is this stock, this is like the last 10 years of Cheesecake Factory stock. It's usually a stock anywhere between $30-ish and $60-something. And the way I kind of view this is this was obviously the worst case scenario for Cheesecake Factory stock when it fell all the way under $17, which is about 50% downside roughly from here, okay? That's not happening. Then happened because we had one insane stock market crash, the fastest stock market crash ever there in 2020, but also because they were closing all restaurants around the United States of America. I don't know how many of you guys remember, during that time period, all restaurants were closed. We didn't know if companies like Cheesecake Factory were going to go under because it's like these were just restaurant chains that literally couldn't even run their business, right? And so there was a real thought during that time period of oh my gosh, all restaurant chains could go out of business, right? And then obviously a lot of these companies pivoted to go food, and then a couple months later, they started being able to open up restaurants and at least some capacity and things like that, okay? So going down to $16, $17 isn't happening. The way I kind of view this as max downside for a stock like Cheesecake is maybe 10 to 20%. That's if you get into a bad recessionary scenario and, just their business weakens massively from here, right? So that's the way I view it. Max downside 10 to 20%. Long-term upside, I think, is probably 100% plus. I think this is likely going to $60 to $70 over the next few years. And meanwhile, I get to collect a 3% plus dividend yield on the shares I'm buying now, right? Which, let's be honest, that dividend should get increased quite substantially over the next few years. And the worst of inflation is now behind us. So if anything, I would say they're likely going to be a lot more profitable over this next 12 months than they probably were over the last 12 months, regardless of what happens in the economy. So for a risk reward in this one, it's very attractive. Let's just call it that. When I'm looking at a stock that has long-term upside of 100% plus and downside of maybe 10 to 20% in a bad case scenario with that sort of dividend yield, I'll take that any day of the week. So I'm going to be a big buyer of Cheesecake Factory stock over this next, I would say, basically about the next 6 months or so in regards to this one, okay? Now, I had dinner with a friend recently, okay? And this friend, he was like, why is the market so high? He believes the market's so high, right? And he's like, come on, can't we crash this thing down or something like that, right? And he was basically saying, I have a lot of cash to buy with, but I'm scared to put in the market right now. Aren't we going to go down, something like that? And he kind of wanted my opinion, right? And two things I have to say to this, okay? I'll tell you the same two things I told him. First off, does he think he's the only one that's cash loaded right now, right? And that was the first point I brought out. Because the fact is, right now, the amount of people I just know personally that are sitting on hundreds of thousands of dollars of cash or millions of dollars of cash and are way too cash heavy is a long list, folks. Is a long list. Now you say, oh, Jeremy, you must just know rich people or something like that. I'm just telling you, these people are way off sides. They're way heavy on cash right now, okay? And so the problem is, if you have massive amounts of people that are cash heavy, way too cash heavy, eventually people start getting impatient because they're waiting for the drop to happen. And sooner or later, people are like, damn it, I got to get in this market. So slowly what you're going to start seeing play out over the coming months, in my opinion, is a lot of these folks, on any dips in the market, they're going to start having to buy in, or they're going to be left behind, right? And so that's where it gets hard to get a massive dip. Like, why can't we just get the S&P 500 to fall 10, 20%? You need massive amount of sellers, and you need the folks with money on the sideline to not come in, right? It's like, why can't you get LA real estate to fall in a massive way? The reason you can't get LA real estate to fall in a massive way, right, is because at the end of the day, there's so many people with so much money in LA that if real estate prices just drop a little bit, they're ready to pounce like that and buy a real estate investment property or buy a property to remodel it and flip it. There's so many of those people in LA. And so it gets hard to get that market to drop in a substantial way because there's always money just sitting there, right? And so the same exact phenomenon is going on in the market right now, where you've got so many people with so much money sitting in treasuries, savings accounts, CD accounts, waiting for this crash to happen, right? Because, the great financial crisis, we fell 50%. Why can't we fall that much now? And they're waiting, and they're going to continue to wait, right? The second reason I think the market's held up relatively well, despite everything that's been thrown at it, is passive investing, right? Because at the end of the day, we got to be honest, over the past 15 years, so many people have gravitated toward passive investing, where basically they just have a certain amount of their paycheck go into the S&P 500, or they do it themselves, whatever, right? And they're just consistently kind of buying into the market. And they're not worried about selling, because they're not retiring anytime soon. So I think that's a big part of this, where people just, put money into the market. And so it always creates this buying pressure, and specifically around the S&P 500 and a lot of the NASDAQ stocks as well, a lot of the NASDAQ 100. And so I think that's another huge component why you can't get the market down in a massive way. And even if I think about myself, I'm a consistent buyer every single week in the market, and I love it, okay? Every week I buy in the Patreon portfolio. By the way, I'm making my moves in there tomorrow. So if you want to see all the moves I'm making in there tomorrow, check out the pinned comment down there. I'll be making moves in there. Every week I'm buying in the Patreon portfolio. Every week I buy in the public account, which is in the private stock group, right? Every week I'm buying in my dividend portfolio. Every week, okay? And so I think that's one of the big components you have out there is consistent buyers, right? The only difference is between me and maybe a lot of other people is they might just put in an index fund or something like that, where I'm picking actual individual stocks. I'm like, I want to put my money in this stock today, right? And so it's just a different mentality than I think a lot of past generations had around, buying in the market, where they thought they had to time it out perfect. And I think we just have gotten smarter a little bit, in some ways as humans. And I think one of those ways is just realizing we're not going to time it. Look at the data. Look at every great investor ever. They are going to tell you they can't time the market despite having 50 years of experience. Warren Buffett's been doing this since, probably since before my parents were born. That man can't time the market. If he can't time the market, who are you to think you can time the market? It doesn't work like that. No one can do that. You can get lucky once or twice, but I'm telling you, try to sell it out of your portfolio and buying back in, it's a fool's game. It's always been a fool's game. No one got on that billionaire list from doing that, I can tell you that much, okay? So, it's important. Now, next thing up here, volatility is down in a massive way, okay? If you are somebody that needs to hedge your portfolio, it's an interesting time period to potentially hedge if you need to hedge, right? I think a lot of people actually are probably underinvested right now, so that's probably not a big issue for folks. But for the folks that, let's say you're super heavy long positions, you don't have a ton of cash around, and you are worried about downside over the next 6 to 12 months, if that was to happen, it's an interesting time to hedge your portfolio if you want. And there's so many various strategies. And for everybody in the private stock group, the private wealth group, I put together an insane 45-minute beast video. It was a hedging portfolio masterclass on just, I went through the 4 main strategies, exactly how you do it. So make sure you guys watch that beast of a video. I put in a lot of work and effort into that one. And, all I can say is it's an interesting timeline if you're interested in hedging a portfolio at all, with especially the VIX being fairly low right now over this next, I would say 30 to 45 days. Now, if you want to know the perfect correlation, this is insane, okay? You got to add Dixie, DXY, to your whatever tracker you watch stocks on or whatever, okay? Because it's almost a perfect correlation right now between the dollar and the NASDAQ. This is a past year for the dollar versus the NASDAQ. And the dollar peaked almost exactly when the NASDAQ hit lows, okay? Literally, look at how close it was. And then the dollar just starts going down and down and down, and look at what the NASDAQ's done, up and up and up. It's almost a perfect correlation between what the dollar does and what the NASDAQ does. Bottom line is right now, at least over the past year or so, dollar goes down, NASDAQ goes up. Dollar goes up, NASDAQ goes down. It's almost a perfect correlation. And it's been fascinating to watch this play out. And I would just, like I said, everybody should add the dollar index to your whatever track, you use for tracking stocks and moves and stuff like that. Because it's fascinating, man. It's absolutely fascinating. I don't know if this continues forever, but it's been the story of kind of the NASDAQ over this past year. Insane correlation, folks. And sometimes you're going to see stuff like that in the market. So, stay long, stay strong out there. Take advantage of deals in the market. If you're looking to hedge, there's certainly opportunities out there if you need to hedge your portfolio at all. Appreciate everybody joining me as always. Make sure you join us in that Patreon. I am making my moves in there within 24 hours to get access to see the entire portfolio and all the moves I'm making in there. Appreciate y'all. Much love as always, and have a great day.